Indian markets are jumping to the sound of a bullish beat despite geopolitical tremors rattling South Asia and tariff crossfires erupting across continents. Despite mounting global trade tensions and a tense standoff between Pakistan and India, the Sensex has jumped 7,000 points in just 2 months, and the Nifty has gained a healthy 10%. Indian stocks have remained largely calm through the diplomatic positioning between India and Pakistan. The reasons are largely driven by global cues. The rupee's surge to a 5-month high was aided by two major tailwinds: the drastic decline in the value of the dollar and the significant drop in the price of crude oil. That has boosted foreign inflows into Indian assets. Now, rising India-Pak tensions are also firing up defense stocks. Hindustan Aeronautics Limited and Garden Reach Shipbuilders and Engineers, two major players in the defense industry, have continued to rally. Well, investors have demonstrated a major interest in the defense stocks amid tensions between India and Pakistan. This is according to an analysis of the stock prices of defense manufacturers from April 23rd, the day after the Pahalgam terror attack. On the other hand, Pakistan's stock market has crashed. The KSE 100 index is down over 7,000 points since the Pahalgam terror attack. Between April 23rd and Friday last week, the index is down 6%. Now, that decline in the best performing stock index this year is a reflection of the rising tensions between India and Pakistan. And for more on this, we have with us Mithali Nikore, economist and founder of Nikore Associates, who is now joining us live from New Delhi. Welcome to the broadcast.
Thank you. Always good to be here.
Mithali, let me begin by asking, why are the Indian stocks calm amid Pakistan tensions while the Pakistan stock index reflects those concerns?
So I think when we look at the Indian stock markets, there's a broad base when we talk about the Indian stock markets. There's a broad base when we talk about the Indian economy per se. The Indian economy is a vast economy. We have a population of almost 1.5 billion people. We have a massive amount of export and international linkages. A lot of international markets have come in the support of India against its war on terror. When we look at the US, when we look at Russia, they've all sort of come out and say that, India is on the right here, and India has actually been a victim of terrorism, which essentially signals, the fact that these countries are going to support India's position. But the bigger reason is definitely the strength of the Indian economy. India is the fastest growing emerging economy in the world today. Even the IMF's latest projections put India's growth at 6.2% for 2026, 2027. And even amidst all the tariff tensions, even amidst all the, warmongering and other discussions that are going on post-Pahalgam, India's economy within itself also as a domestic economy remains very strong and buoyant. And therefore, it will take a lot more to shake the Indian economy at this stage.
Right, Mithali. And all said and done, while the defense stocks are rallying on the shadow of the war concerns, broader Indian stocks are also seeing a strong rally. What is your assessment of that?
So at this point in time, when we look at the strength of the Indian economy, there's a number of positive global headwinds that are actually rallying the stocks. I mean, the first one is really the discussions that are going on with the US and the fact that India and US have already signed the terms of reference for a future trade deal. It has sort of been agreed that the two countries are going to be working much more closely together and in the longer term. There's also positive headwinds when it comes to manufacturing onshoring in India, because, of course, the production linked incentive scheme has been a phenomenal initiative by the government of Prime Minister Narendra Modi. But on top of that, the fact that the US economy and other Western economies are coming to India and saying, we want to manufacture in India, we want to diversify away from China, and that sentiment coming most strongly from the US signals a future growth path for the Indian economy, which is highly sustained. And third, thirdly, of course, when we look at the tech sector and the fact that, the US has made great strides on artificial intelligence, and for India to come in as a partner for the US in this sector signals a bright future for the Indian economy per se. So, in all of this, definitely we are aware that there could be a broader war. It could be a sustained, conflict. It could be, a slow burning conflict, but that it in a way happens in one side of the country, and the overall country's economy still remains and continues to grow.
Right. And Mitali, echoing the foreign investment sentiments, how do you see the tensions play out in Indian stocks, especially from the foreign investor perspective?
So I think it's fairly evident that most major Western economies that India does business with and tries to attract investment from, these are Western economies that have come out very broadly in support of India's position when it comes to this conflict. And at the end of the day, countries like the US, countries like Russia, but also European countries have expressed solidarity with India in its war on terror. So I think it's fairly evident that this will not disrupt any of the economic dynamics and trade relationships that India has built with these countries, either for merchandise goods or for services. And pretty much the only diversion and disruption that one expects is, the rerouting of flights over Pakistani airspace, and alternative routes have already been found for that. So from an economic strength and, resilience perspective, India continues to be in a favorable position.
Right. That was Mitali Nikore joining us from New Delhi. Thank you so much, Mitali. It was a pleasure having you on the broadcast, and thanks for sharing your perspective on the matter with us.
Thank you.